This is Chris Elliott with RE/MAX Action Real Estate coming at you today with your local Richmond real estate market update for the month of August 2019. Hope you guys have been phenomenal. Hope you've had a wonderful summer. I hope your air conditioning is working because it has been hot lately. But anyway, as we do always, want to start you with some local market news. So couple interesting stats looking at the numbers from July of 2019. So we're always looking back a month. We don't have the numbers for August yet. Closed listings dropped slightly from June to July. Pending listings dropped slightly from June to July, along with new listings, new properties hitting the market dropped slightly from June to July. So once again, we've talked about it the last couple months. Richmond's very much a bell curve market. It tends to slow down a little bit in the fall. So we're seeing a little bit of that slow down June to July. I would imagine if we look at the numbers that they're going to continue to trend that way a little bit going into August. We're certainly seeing it, in the trenches. Median sales price in the month of July was $322,530. Average percentage of list price to sales price was 99.5%, which is phenomenal if you're selling. Average days on market was 24.67 days. I don't know how you get 67.67 days. Maybe it sells in the afternoon. Month supply of inventory was 2.21 days, which is phenomenal. Anything south of 6 days, 6 months supply of inventory is considered a seller's market, so we're still very much in a seller's market. So that's the local market news. We're going to add something in this month. I'm going to give you some interesting things to look on the national landscape. So mortgage rates dropped to, prime rates dropped to 3.75%. In the month of July, they've crept up a little bit, but mortgage rates are still phenomenal right now. We didn't think they could get any lower. We didn't think they were going to trend downward, and they certainly did, which was great. And so we touched on this, I touched on this recently in a separate video, but a couple things to know about the upcoming recession. The stock market took a hit last week. You've probably heard in the news recession being mentioned. You're certainly going to see and hear a ton more of it as it gets sensationalized in the news media. Once again, it's a grabbing headline. We're coming out of the Great Recession of 2008, so a lot of people still are licking their wounds from that. But also with the presidential election coming up in 2020, you're going to see both sides gravitate towards that topic. It's going to be continued to be talked about, but I wanted to give you some insight, some perspective from a recent real estate conference I was at on the real news of the recession and how it affects the housing market. So a couple things to know. We are currently in the longest economic recovery in U.S. history. I'll say that again. We are currently in the longest economic recovery in U.S. history. Now, the only way a recovery stops or plateaus is with an economic slowdown. So what is the definition of a recession? The definition of a recession is 2 consecutive quarters of negative GDP growth. So once again, while we're all a little bit scared, we're all a little bit nervous hearing that word because it's certainly, anybody that experienced a recession in 2008 probably still feels the pains from that. Know that not all recessions are drastic recessions like we saw 10 years ago. So that's just something to know. The second point here is that a recession does not necessarily equal a dip in home values. So we certainly saw that in the last recession, but if you look at the last 5 recessions, and I'll try to get a graphic here somewhere, but if I can, just know that in the last 5 recessions, only 2 of those had a dip in housing values. So in 3 of those last recessions that we had, housing values actually continued to increase. In 1995, housing values did drop, but they only dropped about 2%, which is not all that drastic. And in 2001, housing values actually increased 6%, which is double what the historic long-standing appreciation rates are. So in 2001, which they're projecting that this recession is going to look a lot like 2001, housing values continue to increase, which is really good if you're a homeowner or somebody looking to buy here in the next little bit. Certainly in 2008, we saw a pretty drastic drop, about 20% in home values on a national landscape, but that's not what they're projecting for this upcoming recession. And the third point, which we kind of already tipped on, is all of the top real estate economists are projecting that housing values will continue to increase at 2.5% to 3.5% per year for the next 5 years, which is phenomenal. So we've been appreciating at anywhere from 5 to 7%, depending on where you live, appreciation rates. So we've been going like this. Of course, you can only go like this for so long. So what they're projecting is that while values will plateau just a little bit, we're going to continue to rise, but just at a slower pace that we have been the last, let's call it, 8-9 years, which has been really good appreciation. So hope that helps when you're seeing that in the in the media out there. So what does this all mean for you? Well, if you're somebody that's looking to sell, one thing that the conversation I'm having with all my clients right now is to know that the summer selling season is over. We are at the end of August. The kids go back to school here in a couple weeks, possibly even a week by the time this video goes out, and the summer selling season is done. So what that means is if you're somebody that's been on the market and you haven't sold yet, now's a great time to tighten up that pricing just to make sure that you're priced appropriately so that you don't continue to hold the property through the fall as the market gets continue a little bit slower. And if you're somebody that's going to be hitting the market here pretty soon, you want to make sure that you're pricing your property appropriately. Now is not the time to try the super ambitious price that maybe nobody's ever gotten or maybe is above what we think the market value is for your home. Because if you miss the mark on pricing at this time, there's a good chance that you could end up holding the property through the fall and maybe even through the winter. And if that's not an option for you, you certainly don't want to get yourself caught in that spot. Okay. Also to know on the flip side of that coin, we have had strong. So conventional wisdom is that the market dies in the fall and in the winter. Not the case in Richmond, and certainly not been the case the last couple of years. We have had very strong fall markets and winter markets over the last couple of years because of inventory being in such a shortage and the pent-up demand with buyers. We've continued to see homes sell and sell at good prices throughout the fall. So don't feel like, hey, I'm late to the party, we're just going to pack it up to the spring. We can certainly still sell homes, but it's not the feeding frenzy that we saw earlier in the year in the spring and the summer. So just something to know. If you're a buyer, just know mortgage rates are at a great historic low. We probably won't see rates this low for a good while. They really don't have much more room to go. They really don't have anywhere else to go but up. I know we've said that previously. We saw a slight dip, but I wouldn't play that game of, hey, I'm going to hold out till they go to 3.5%, just because 3 3/4 is a phenomenal rate if you look at historic mortgage rates. And like I said, they're projecting that they're gonna rise from here on out. Also, if you're going out shopping for homes, just know the fall is a great time to buy. But you potentially are going to see less inventory on the market. So a lot of the folks that hit the market earlier this year have already sold. Some folks have taken their house off the market because they just want to try next year. So just know that going into it, that hey, less inventory is going to be on the market. One of the things that we always like to do with our clients is have our clients look at previous inventory that's either sold or is currently under contract, just so you can get a feel for what's your price range, what you can expect to see. That way when the right home pops up, even though you maybe haven't seen a lot of homes that are active on the market, you have that confidence to go out there and to shop and to pull the trigger knowing that, hey, this home's a good fit for the area, for the price range, for the school, whatever it is that we're looking for. And then last but not least, know that the fall and the winter are great times to buy. Sellers tend to be a little bit more motivated. There are less buyers out there. You're not going to be competing as much as you would be in the spring and the summer, certainly not as much as you were earlier this year. You still have to act quickly, but you probably won't be getting into a multiple bid situation on every property like we were seeing earlier this year. So hope all that makes sense. Hope you guys found some insight there. If there were any questions or concerns that I did not address, feel free to comment below, send me a direct message, send me an email, give me a phone call. However you're getting this video, just respond back. Would love to answer those questions for you. And certainly if I can help with any of your real estate needs, let me know. Hope you all have a great rest of your day. I hope you have a phenomenal rest of your week, and we will see you next time.